This is your host, Stephen Sargeant. We were able to track down the Charlie Hugh. We got him in a restaurant. We asked him, can you record an emergency podcast? He's former Polygon, former Tezos chain, and now he's a CEO and co-founder of Bitlayer, where they're building layer 2 on top of Bitcoin, one of the most powerful blockchains in the world. You've all heard about it. We talk about his early days in crypto since 2013. We talk about DeFi on Bitcoin, including NFTs, ordinals, staking, bridgeless building. This is an amazing conversation to find out everything that's going on with the next revolution of Bitcoin. Tune in, and thank you, Charlie, for interrupting your dinner and sitting and talking with the Around the Coin podcast. This is your host, Stephen Sargeant. We have Charlie Hugh live on location at a restaurant. He took time out of our day to tell us how he is building on Bitcoin. Charlie is the CEO and co-founder of Bitlayer. I was just saying before the show, we just interviewed Matt from Arch Network. So we're excited to have back-to-back episodes talking all about the different ways you can build on Bitcoin. You're an early builder and investor in Polkadot. You worked and you kind of like have that Southeast region working on several different projects there, including Tezos. Tell us a little bit about your background, how you got all wrapped up into crypto and Bitcoin, and then we're going to jump right into it.
Yeah, thanks. First of all, thank you, Stephen, for having me. Great to be on the podcast, on the show. Yeah, the journey with Web3, it's been almost 10 years. So I brought my first Bitcoin in 2013 in Amsterdam via a pretty random Amsterdam Bitcoin meetup. But obviously, that's kind of how I first have a good understanding about what is proof of work, what is decentralized network. Ethereum got me at my full attention in a way. I feel this is the industry I want to be the lifetime career. Yeah, as I mentioned, my first major gig and involvement as a project was Polkadot. As an investor, we built a Polkadot ecosystem brand. It's kind of like Solana with super team. We call it Polkabase. I co-founded that. We end up with investing, incubating around quite a few Polkadot projects. DeFi summer came, I moved back to Ethereum and L2 stuff. So I joined actually Polygon, became the head of ATC ecosystem builder. So that was a great experience learning, building, doing BD and DevRel for a very major Ethereum ecosystem. But my journey with Bitcoin was actually 2023 with Ordinals. So I was pretty lucky. My friend was literally day one on Ordinals. They were inscribing first white paper on Bitcoin, all kinds of different inscriptions. He told me this is going to be the next big thing. In the beginning, I was like, I don't get it. And then I realized, okay, Bitcoin native assets, natively inscribed on Bitcoin block, Bitcoin native NFTs, and then BRC20 fungible tokens, mana protocols. Okay. So that was after 1 week of research, I started actually educating what is Ordinals. Early 2023, BRC20 token came. It became quite a big adoption in Asia. And I was wow, the first wave of adopter and educator. And I was on Twitter space 5 days, hours a day in the first 6 months. And obviously, the pivotal moment for me, at least, to really start deep dive building things on Bitcoin was because of the Ordinal Summit, September 2023, during the Token 2049 Singapore conference. Domo, who was the creator of BRC20, he was sharing all the traction, all the things happened in the last 6 months during this BRC20 mania. And they entered this debate between Domo and Casey that all the on-chain UTXO getting generated, right? People paid all the crazy gas fees with Bitcoin and all that. What's the end result of that, right? The Bitcoin network become very congested. People have to pay so much gas fee to do the basic payments as well. And the mempool was always full. We need to scale Bitcoin, right? Regardless, one way or the other. And that's kind of for me to really feel okay, this is a very important problem to solve in this space. I want to be the builder back again to scale Bitcoin. So, I mean, obviously we know there's sidechains, there's Lightning Network in the past, Colorcoin, they all had the attempt. But the BBM was kind of, for me, really feel okay, this is I wouldn't say holy grail. This is a very exciting approach, really inspired, and probably the highest chance we can be successful. So after BBM white paper came out, published by Robert Linus, one of the very, very good OG Bitcoin researcher, like me and my co-founder Kevin, we started talking about how to build things with BBM approach. So we started as a research group, and then we realized it's going to be a very exciting journey. So we decided to full-time building things with this company brand called Bitlayer. It turns out to be a very good brand. People like the name. Yeah, that's how we started the journey. Yeah, from
You're
2023.
surprised there's any names left after 13 years of Bit and Coin. So many different plays on that. I'm curious. You talked about the early days buying your first Bitcoin in Europe. Who else was there? Anyone else at the meetup at that time that's quite notable now? Like you always run into those people in the early days, and then they turn out to be some of the biggest builders, including yourself now. Was there any other people
Yeah,
that you remember that were early days and you're like, oh, I remember like talking to them in a small
they
group?
they
Uh,
they're mostly miners. Yeah, so
mhm.
Bitlayer, right? As a matter of fact, we are talking to quite a lot of mining groups. We have a big press release we're gonna publish by the end of this month during Token 24 and Dubai. But a specific person in that specific event in Amsterdam 2020, 2013, I think it was just few people end up with studying this Bitcoin mining pool called N pool. So one person called Andy, I met him there. We disconnected for quite some years until like obviously now we are Billy actually going to partner with N pool on the BVM bridge side as well. So
that's
back
awesome.
in days, even like Gentarico was kind of trying to contribute in Bitcoin and network, right? The fact that he couldn't do that much what he wanted to, that was the reason he started Ethereum from the very beginning. Yeah.
That's really interesting. Talk to me because you said you were in Asia at the time. What was it like? Like you spent a lot of time there. What were what was the ecosystem like in Asia? Because I feel when it comes to crypto technology, they've always been a little
Mm.
bit of ahead in some ways, especially when it comes to culture right now with meme coins and blockchain
Right.
gaming. What was the culture like down early days as you were building on Tezos and Polkadot?
Great question. Yeah, I think with Polkadot, it was a great journey. Polkadot has huge adoption in terms of builders, in terms of the interoperability mindset. A lot of people love the idea of, have so many different chains interconnected. It was like a network of networks. Gavin, who was the CTO of Ethereum, when he started Polkadot, it was a great vision. And somehow, he has, I mean, he's a great founder, great charisma, very technical, actually one of the GigaChat like coder developer, but he also is very good public speaker. He got a lot of fan base while he had a first tour in China. I was his first, I volunteered, became his interpreter, and a lot of people loved asking a bunch of questions. It was like a nice coincidence. I being his investor, and also I know I love the Polkadot vision, so I managed to really interpret the way he speech. Like his speech was very fast, very technical. I was probably the only person that actually understand what he was trying to say. And a lot of people get to know Polkadot via me by translating. So building things with ecosystem in China, in South Asia is very different. It's very fragmented market, and the retail hype or retail energy is very, very high. People like to be risk taking. They like to try new things. A lot of the retail pioneer came from Asia, including Ordinals. So in 2023, Ordinals community actually came from Asia. 99% of the adoption was in Asia. And then the Western community picked up and follow up, right? Because of the traction, because of all the other integration, like the major wallets that integrating, right? And also a lot of the interesting KOLs that talking about building things on Bitcoin, especially from the ordinals and so on. So that's that. In terms of developer community in Asia, it's very different. The country is very large. In, let's say, southern part of China, or let's say Vietnam, it's actually very, very advanced and also very forward looking. There are always people try the new things. Like Vietnamese community, some part of the Chinese community was like first wave of adopter in terms of DeFi summer in 2020. A lot of people building DeFi protocols such as the Kyber network and a few others. They were like first wave in DeFi. Kyber network founder who actually initiated the Raptor BTC, he's also our angel investor. Those are the like absolute OGs, like first wave, right? In terms of, you mentioned meme coin, right? So the retail wise, I would say Asia depends. Some of the very smart little cabal, those people start everything like first wave in the world. But obviously there's a lot of other retail, they kind of be kind of the late adopter for a lot of things like NFT, or I think 2020, 2021, the DeFi Asia was a late adopter. NFT was a late adopter as well. Like, you're going to have CryptoPunk start from the United States, right? And then eventually Asia picked up. Unfortunately, some became like the extra liquidity. They start buying some NFT really high price, right?
They picked up too
So
late.
yeah,
They picked up the trend a little too
exactly.
late.
Yeah. So, but I think building things in Asia community with global projects, I think it's very fun, also very challenging because it's different culture.
Right.
The communication flow, you need actually proper bridge to really translate the content into local languages, actually go through the local regional channels and the communities. The gap or information isolation is still, it was very big. Now it's getting less and less because everybody start interacting, with all the conferences, everybody kind of mingle with each other very easily. Like big ecosystem like Solana, we have a very deep community in Asia. Like Bitlayer, we start from Asia. I'm based in Singapore, right? We have a big community in South Asia. I think the gap, when we thought the gap was huge, right? United States and just in Asian community, now it's getting less and less.
Right.
Everybody's kind of in the same page now. Yeah.
I'm curious why Bitcoin? You worked on other blockchains. You even said you were focused on EVM with some of the projects you're working on. Why'd you kind of go back to Bitcoin and being like, hey, this is where I want to put my flag in the ground and we're building here?
Great question. Thanks for asking. So I built things in ETH, right? With Polygon. Polkadot was kind of like a new version. But Gavin wants to even improve ETH, right? In the next level with the interoperability. So I never claim I'm a Bitcoin maxi. I never claim I'm laser eyes. The fact that we're building things around Bitcoin, we are not Bitcoin maxi. So when people say, oh, you build things on Bitcoin, you must be Bitcoin maxi. I always confront them in a way. No, we're not. We actually try to pioneer Bitcoin, try new things, not just only digital gold. So that's that, right? So why Bitcoin? I think 3 major reasons. One, because my frustration with Ethereum, there was a lot of issues with Ethereum Foundation. Ethereum token price has been underperformed massively by Bitcoin, right? Due to various reasons. We can elaborate that maybe next time, another talk, right? It's, we can keep talking about this forever. But I think the Ethereum dynamics become a very strong problem. Ethereum Foundation stop focusing on the product or product market fit. They start focusing on more on the governance, Infinity Garden, the whole politician stuff. That really frustrates me a bit as a user, as a token holder. So that was one thing. Second thing is it's just the sheer amount of Bitcoin TVL, right? The whole market cap is so big already. It's just huge potential, which is we call this asymmetrical potential. There's so much things happening in Ethereum DeFi. Even just 10% of Bitcoin market cap getting activated, to entering all kind of yield protocols and so on. We can get so much value unlocked, right? On the demand side, Bitcoin holders exploring what they can do with the Bitcoin, earning yield, getting more stable coin, borrow against, and so on. But due to lack of programmability or infrastructure, they can't really do that. On the supply side, especially Bitcoin DeFi, the DeFi builders or protocols, they want access to new assets. They want to embrace new TVL. So the Bitcoin TVL is going to be the very major source they want to embrace. And we all know what happened with Ethereum, right? It's like there are over 150 Ethereum L2s. So the liquidity fragmentation in Ethereum is very big problem. And I don't really think there's a very, very quick fix nearly soon, right? So all these dynamics intertwine. For me, it's very obvious. Building things on Bitcoin has more potential, for high upside. And it just makes history. For me, I'm always going to hold Bitcoin, especially a certain percentage of my portfolio for the long run. I will never sell that position of Bitcoin. You building things with Bitcoin is always kind of part of the history. Bitcoin is the only network which is still kind of the same. Didn't really change the consensus in the last 15 years. It just keep running as we are, all the way from Halfini in 2009 till now. It's been multiple cycles, a lot of history there. Ethereum, Solana, many other big ecosystems, with all due respect, is still very early. So it just feel everything you contribute in Bitcoin network, in Bitcoin history, is just more meaningful in the long run. And I feel like there's nothing more inspiring than building things with Bitcoin to make contribution of that. Yeah.
I love it. Can you tell me what Bitlayer is doing? Maybe explain it. We have an understanding now. Arch Network, they were doing it a certain way. We know Babylon Chain is building DeFi on Bitcoin as well, or, staking on Bitcoin. Kind of shows what is your lane? What are you working on? And maybe what's novel about your approach versus some of the other approaches of other companies that are building on Bitcoin?
Yeah, thanks for asking. So Bitlayer focus on the BVM approach, which is we are one of the first team doing research and engineering about BVM. We've been contributing as one of the largest engineering team and research team, altogether over 45 engineering research, and been working on BVM on the Bitcoin Trust Minimized Bridge and the Bitcoin verification with BVM like in the last 16 months. Right, we started late 2023 until now is like over a year, around 16, 17 months now. So a lot of a lot of hours, a lot of hard work has been put into that. So we are leading the efforts on the BVM Alliance on auditing, on the Graph 16 verifiers, a lot of other technical works as well. We established BVM Asia community. Over 100,000 people get to know BVM and all these ideas and concept of what's the potential via our articles and education and evangelism. So that's that. And what are we trying to do, and what's the difference between us and maybe a few other protocols mentioned, like Arch and Polkadot, is for us, three parameters. To scale Bitcoin, there's three different ways. You have the state channel, which is Lightning, right? They have been successfully doing that, supporting faster, cheaper transaction of payment in Bitcoin, right? With state channel. I think that's already there with certain product market fit. But the problem with Lightning is they can only do payment. You can't really do more complicated smart contract based kind of DeFi use cases, including lending, stablecoin, perp DEX, staking, you name it. They have certain limited programmability, right? With the state channel. There's no smart contract capability and so on. I mean, that's kind of a limitation. Lightning is still there. And Lightning, in a way, we can call it like the first ever Bitcoin L2, right? With the state channel approach. We believe Bitcoin DeFi in the long run can be much more than just payments. We want to do more complicated smart contract based kind of high programmable logical use cases. And the ones that we just mentioned, all the Bitcoin primitive. With Bitcoin as gas fee, Bitcoin as assets, right? So we want to build this trust minimized programmable infrastructure around Bitcoin, settled on Bitcoin, use Bitcoin assets, but in a like programmable layer. So that's why we kind of call it's a category of Bitcoin L2 or Bitcoin rollup. So the difference our architect compared to Stacks or other Bitcoin sidechain previously is the Bitcoin settlement. So with our Bitcoin Verify, we're going to launch the transaction happening on our L2 will be settled through our ZK proof on Bitcoin block, meaning there's going to be fees being paid to the miners, right? And there will be security budget being contributing. More importantly, on the technical side, because the transaction actually settled on Bitcoin block, we have the similar security level as Bitcoin on layer one. People trust Bitcoin security. They can trust the transaction verified on our network. That's a key difference. Bitcoin, yeah.
I want to interrupt there. So is it other, applications, are they sometimes settling outside of Bitcoin? Like, the transaction or the, infrastructure is Bitcoin, but they're selling it, I think, on EVM or other blockchains.
So side chains. So for example, all the Bitcoin side chains currently, like Stacks and a few others, the settlement is on their own validation sets.
Right.
It's not settled back. The Bitcoin Fnatic doesn't have on Bitcoin L1.
Right.
Yeah. So that's kind of the key components. Yeah.
And that leverages the security of Bitcoin. But I want to jump in here because, you have a bridge, protocol. Aren't you, do you lose some of that, security because of bridges? Like I know on the Ethereum bridges, we know the Ronin hack, $600 million. Once you get to that bridge ecosystem, you extend out to bridge risk and other attackers. Does that similar thing happen on Bitcoin when you build a bridge on Bitcoin?
So that's exactly the reason we want to lower down the trust assumption, make it more trust minimized, and make it a higher security level than the multi-sig, right? The rapid BTC start from 2018. It's essentially a multi-sig, 2 out of 3, 3 out of 5 kind of multi-sig approach to bridge assets from Bitcoin L1 to Ethereum L1. It's been there, but a few of the multi-sig owners of rapid BTC changed their ownership. So Big Global, which is essentially owned by Justin Song, own multiple private keys on that. Big Gold and a few other OG initiator and the founding members of the Rapid BTC already stopped actually operating that. So I think we have a conclusion we can fairly easy to draw. Rapid BTC, Rapid Bitcoin, or this multi-sig approach is not the end game of Bitcoin bridging. So obviously you mentioned about Arch, right? There's a meta protocols and some other kind of layer one scaling approaches. They try to do the native Bitcoin L1 kind of programmability. We tried that route as well, but I think it's going to be very limited in terms of programmability. And using Bitcoin script to do native Bitcoin smart contract is going to be very limited in terms of the finality time, the whole performance on transactions, and so on. So our approach is focusing on high programmability, high performance, and the BVM bridge, which we are lowering down the trust assumption from majority honest to one out of a model, is kind of majority solving the problem of bridging security, make it more trust minimized, but having the high level programmability, I think that's the important thing. So,
and that programmability allows you to offer things like the Bitlayer yield BTC, right? Where you can offer yield. Is that accurate?
The Bitcoin yield, the Bitcoin yield. Yeah. And also high performance on-chain option protocols, the perp dexes, all that. Yeah.
Yeah. Okay. Getting into decentralized exchange. What are your thoughts about yields? There's been like a 4-year time period where the word yield had a bad connotation. We saw what happened with Celsius, Anchor, and other projects that, promoted high yield. Do you feel like we've gotten rid of that stigma and now yield is more utilized with actual legitimate staking projects than others?
It's a great question. So BlockFi and a few other, of course, FTX, a lot of them are centralized CeFi kind of approach, right? You have to socially trust those counterparties and entities and institutions to handle the user fund properly. And that was kind of the reason we had all this crazy crash in 2022, right? The counterparty risks, the commingled funds, all that. So I think, as a matter of fact, we have to focus on the first principle of self-custody, DeFi focused yield and yield DeFi protocols, right? So that's kind of what we want to stake for. Obviously, there's people prefer the trust Coinbase Prime, BitGo, and a few other custody provider, which is institutional driven. I think they're doing well. I mean, big respect on those institution kind of level of custody. But I think people, especially the Bitcoin communities, they want high level of self custody, lower down the risk with the counterparty risks and so on. That's the important thing. In terms of yield with APY, I think the whole unreasonable 40%, even 100% APY, that era is gone. That's the DeFi summer 2020, right? People realize it's not sustainable. A lot of those yields is kind of inflated with some fake points or other tokens on top of it. And all this restaking, which we had a lot of hype last year, now people more and more getting rationalized. Okay, some of restaking yield are just multiple layers of token with the APY, with the points. How sustainable is this going to be, right? The good thing, and also the things that we feel, okay, we have we're going to hit an interesting equilibrium is Bitcoin holders had no yield in the past. By holding your Bitcoin in cold wallet, you're not receiving any single dollar yield, by just doing that, right? And a lot of the Bitcoin holders, especially the new ones, are exploring low rate yield, but just with some adjusted risks, right? Some people are okay even with 2% yield, right? So there's a lot of kind of a proper, large sustainable yield products and protocols we're exploring as well. They provide the range around 5 to 10% with certain kind of parameters. And they also offer some kind of on-chain DeFi option protocols to cover some of the risks into the principal protection and so on. I think that will get into more and more interesting comfort zone for a lot of Bitcoiners to properly tap into all these yield products. And obviously there's some other high risk kind of high return kind of protocols, which they give you 25% of the APY for the 3 months period, right? Boosted by some of the other additional incentives. So things like that's still happening. And we see that as well. So eventually building things in Bitcoin, we need to focus on three principles. One is self-custody. 2 is like trust minimization, right? 3rd is liberal market. If people wants to take high yield with high risk, so be it, right? There's like product market fit on that. But there's people wants to have a low yield but low risk. I think that there's a certain different category of risk taker and risk adverse people, but still taking not like completely zero risk to go for it, right? So I think we're gonna find different tiers with different product market fit, and that's what we're aiming for to build this infrastructure for.
I love it. Some people want to get their Bitcoin active. It's just sitting there. They want to do something with it. They wanted to, get some motion going on and they want to tap into a lot of these resources. But I think that's important to know. There are some people that, hey, they want to take that risk. And those protocols aren't saying, hey, this is what we saw back in 2020, which is this is 25, 30, 40% absolutely no risk. You realize now, like, hey, this is risky, but you also have the option to be a little bit more conservative. Talk to me about the 400 trillion number, the trillions. There's a number already throwing around Bitcoin and liquidity. Why haven't we, been given access? Why haven't users gotten access to these trillions over the last few years? Why are we still fighting to get access to this liquidity?
Well, as I said, Bitcoin ecosystem primarily was focused on mining, right? My first Bitcoin I encountered was in a mining community event in Amsterdam. So a lot of miners have a lot of Bitcoin. Those miners actually operated the mining almost like a manufacturing business.
Right.
The only thing they care about is the electricity costs and how much Bitcoin they could potentially mine every single day.
Yeah.
So those people have very little financial knowledge. They don't necessarily do asset management and so on, right? Those Bitcoin is now contributing and entering like a liquidity pool across DeFi ecosystem and so on, right? DeFi came from Ethereum because of that, right? Like different crowd with different level of financial knowledge and a lot of engineering, design, and so on. More and more people who are new Bitcoiners across the institution and retail, with very high level of Bitcoin and like financial knowledge because of ETF and so on. So we're encountering and talking to a lot of high level financial savvy product builders and also users and investors. But I think that's the very important thing. The demand and supply side getting more and more financial savvy. They actually want to explore how to improve their capital efficiency and then getting the new opportunities, right? Access to new products and so on. So the community of Bitcoin holders changed quite a bit, right? Due to ETF, due to the DeFi and all that, right? We had one of the first Bitcoin project backed by Franklin Templeton. We're talking to many other Bitcoin ETF firms and issuers. Like it was amazing conference in Digital Asset Summit in New York. A lot of those Wall Street institutions were sharing their knowledge and all their insights about Web3, especially Bitcoin DeFi and so on. So the things are changing. The crowd is changing. And the level of people with the financial level of knowledge is changing, right? It's not just minor approach, minor preliminary. 10 years ago, you talk about Bitcoin, you go to a Bitcoin meetup, everybody just talk about mining rates. Everybody talk about the hash rate power, the miners, that's it. There's no other things they talk about. There's no other things you can really talk about, right? So this is very different. The second thing, which we need to actually do together with other builders or other protocols, is the new tier of high programmability, trust minimized, proper design and security level of infrastructure to empower those Bitcoin DeFi stack. Without that, you can't really do Bitcoin DeFi. Then all this Bitcoin liquidity sits on the cold wallet. It's not going to be accessible to any users. You building a DeFi use case or protocol have very little correlation with all the Bitcoin liquidity sits on all the cold vaults or cold wallets, right? So I think that's the gap we want to close, and we want to let more users access to that liquidity. Yeah,
I love it. I love it. Talk to me. You mentioned the Bitcoin ETFs and being backed by Franklin Templeton. I'm curious. And I know you're not a Bitcoin maxi, but it feels like, the ETFs is moving us further away from the ethos of Bitcoin and turning us more into like a Wall Street financial product. Do you think this is good for Bitcoin, or do you think it's kind of like a double-edged sword? We're getting more institutional adopters, but I think, sometimes we might look at, well, the Bitcoin's not really doing anything and that affects transaction volumes and it could hurt the ecosystem as well. What are your thoughts on that?
well, Bitcoin layer one doesn't have too much transaction volume these days. Unfortunately, that's the truth.
Yeah.
Since 2023, from all those crazy season till now, the mempool become more and more empty, right? Like 2 years ago, it was crazy congested. People paid hundreds of dollars worth of Bitcoin as gas fee and so on, right? So that's very different. ETF is not a trigger of that reason. It's actually not. ETF brought billions of dollars, even tens of billions of dollars pressure for additional liquidity, right? I think it's net positive for the industry in terms of support the Bitcoin price goes up. Bitcoin has been decoupled, has been the best performance assets across all the Web3 digital assets, right? It's going to be probably the reality in the next 2 years as well, right? Bitcoin staking with Bitcoin ETF staking is going to be very exciting policies. SEC potentially going to approve, right? We will see more things happening with the ETF firm, with the position. But before that, yes, the ETF might be a temporary kind of short-term. Somehow maybe get people worried. Oh, a lot of institutions are holding Bitcoin, not the retail anymore. But I think it's part of the adoption process. It goes to every single industry. You have all the vintage, like in the good old days, with a lot of the people who have little groups, people holding that, and then become industrialized. And then because of industrialization and new adoption will demand on the big companies and also small guys as well, the quality of the industry improves, right? So the conversation we are having with some institution, potentially use our technology to access to Bitcoin yield is very legit. They're sitting on hundreds, even thousands of Bitcoins. They properly wants to allocate the Bitcoin into asset management stuff. These are the real users and with real demand. We need to offer real products to them. We couldn't really say, oh, because you're an institution, you don't deserve Bitcoin. Bitcoin is permissionless anyways. So it doesn't really in a way say, oh, Bitcoin should back to all the way 15 years ago. Let's back to the cyberpunk. Everybody don't know who is their real name. Let's just don't do KYC, KML, and then just do this parasudo thing, back to the Silk Road stuff. I think that era was great, was good old days, but it's over. We can't really just go back on that. It's like the same thing goes to music industry, some others as well, right? I'm a big music fan, so I kind of use that analogy. Industry become more industrialized with institutions entering that bring more net positive value and demand and adoption than used to be. I think this is so much important to have those people and embrace them. There's some trade-offs, indeed. By having like MicroStrategy holding almost 4% of the entire total supply, there might have people have concern that the distribution of the Bitcoin network become more and more centralized.
Right.
But I would argue across all the Bitcoin or not the Web3 ecosystem, especially all the proof of stake ecosystem, Bitcoin with proof of work, it's still the most decentralized, well-distributed network in terms of tokens distribution and also the network distribution, right? So that's still there. Compared to many other ecosystems, which start from proof of stake, then none of the pre-mines, this and that, Bitcoin is still the best network, the most secure decentralized network. Regardless, we have institution adoption or not. Yeah.
Right. I love it. Can you tell me a little bit about your ecosystem? Because, Layer has, ecosystem partners and different people or different projects building on it. Tell me a little bit about the ecosystem, maybe some unique use cases, or maybe, since Trump took office, some emerging use cases that, people are now coming to your network to build on.
Great. Yeah. Thanks. So Bitlayer, we EVM compatible. Our V1 mainnet launched last April. So far, we have over like 280 projects deploy our mainnet. The active ones are around still have around 60 projects that are very still active. Like every day has over 1,000 transactions happening on our network. Our all-time high, we hit 500,000 transactions per day. Now still sitting around 250,000 transactions. So altogether, since the V1 mainnet we launched the V1 last year, we generate over 46 million transactions on our network. We made around 8 million on gas fee revenue. And so it's been a pretty active growth. We are one of the fastest growing Bitcoin L2 ecosystem since last year. We have this ecosystem leaderboard in our website. You can easily find top transaction, top TVL, and top popularity projects. Most of the project and in terms of use cases are centered around DeFi. We have pretty much on average 2 to 4 different protocols in every single sectors, categories across all the Bitcoin DeFi primitives. The ones you mentioned with Trump administration, now with institution entering, could be very exciting around our ecosystem. I think one of them I've been promoting and actively talking is on-chain Bitcoin option protocol. So we all know Deribit, right? One of the biggest decentralized option trading exchanges. They require very rigorous KYC and a lot of other things. It's in red tape as well. I would say a lot of Bitcoin holders doesn't want that kind of rigorous KYC. They want to have the kind of DeFi version, non-KYC, more liberal kind of on-chain version option trading. They can buy put options sometimes to check the Bitcoin price going down and other things. Like every 2 hours, they have kind of round robin kind of model to predict the Bitcoin price and do some call option, put option trading, like transact on chain in the Bitcoin layer 2 network. That's a very interesting Bitcoin financial derivative protocols. I think it's going to be big potential. The other side is, the other side is RWA, right? Yeah. We're exploring a lot of RWA protocols. I want access to different type of RWA yield. We are actively exploring that as well. So there's going to be new type of use cases using Bitcoin as assets and liquidity to do different things on chain, right? So that's kind of thing we are actually still onboarding new use cases to work with us in the ecosystem.
That makes a lot of sense. I'm curious, you mentioned KYC, AML, like I'm a crypto compliance person by trade, working doing blockchain investigations. Are there any regulatory requirements? Are you putting any basic maybe things in maybe around sanctions? I know, Chainalysis and other blockchain analytics companies have smart contract calls that, you can at least protect yourself in regards to sanctions exposure, especially if you're building in DeFi. Although DeFi is not covered under regulations as a whole, similar to Bitcoin, as you probably know, 10 years ago, Bitcoin wasn't covered under regulations, but eventually, it's kind of going to go that route. Anytime you're transferring value, doesn't matter what ecosystem. What are your thoughts on regulations and how, some of the builders are protecting their users, especially when it comes to sanctions and North Korean state-sponsored stolen funds?
Yeah, it makes sense. It's very sad that we have all these hacker groups globally still attacking all kinds of very legit companies and platforms. Users' fund getting drained out, right? It's being said since the beginning of Web3, and now not even Web3, the beginning of digital, technology era, right? From Web2 as well. There's a lot of Web2 hacks still happening every single day as well. So that's that. It's not really just uniquely in Web3. It's actually everywhere in the digital world. Right. So it's unfortunate. So security tech, auditing company, security monitoring company, all these on-chain protection protocols has a lot of problems they can fix. They provided good value. So Bitlayer, we have our security alliance. We work with all the best security auditing firms. We're actually handling the BVM verify auditing work, right? We're working with some potential really best of the best ones in the world to make sure the code is being properly audited. We have the highest level of security level and all that. In terms of KYC, AML, or KYT, or all that, Chainalysis is a great partner. We are partnering with them as well. We work with Nansen. We are the first Bitcoin project working with Nansen on-chain integration of analysis tools. We work with, RPC provider. We have worked with the best like server hosting and probability solutions such as Chainlink CCIP and so on. Back to your question about compliance or regulation. I think the whole world is getting more and more regulated, Web3 as well, right? With a lot of things, to protect the user, protect the investor. There's going to be a layer of compliance reg tech there. While the part I feel we shouldn't really completely give away is the private transaction, somehow the on-chain privacy and some of the things people like a lot. I don't think the CBDC approach. CBDC is actually the opposite of Bitcoin. So when people say, centralized government digital asset, I think that's something really make people worry about. And Donald Trump also mentioned, right, the US government is never going to issue any CBDC. I think that's kind of a great way to put it. While we want to protect the users, we need to have some proper AML KYC things, especially when security hacks happen, right? We can trace it and we can find it the way to protect the users, even, go after the hackers and malicious, actors. We need to have a layer of privacy, in certain use cases. That's what people are willing to pay additional fees for that, right? With kind of a liberal market. I think with Bitlayer, what we stand for is the on-chain DeFi use cases. We want to provide the best infrastructure for them, especially for Bitcoin holders, Bitcoin asset allocators, and so on. We are actively exploring collaboration with institutions, right? These are very important sets of target audience and customers and partners we want to work with collectively and transparently. That's the part I don't think we want to say no. I know we don't want to be this kind of privacy chain like Monero back in days. It might not be the right approach in this era in 2025. Yeah.
But I think it's one of those things that and it could be reading you wrong, but it's like, hey, if we need to, we can flip it on if that's what the the use case requires. But if the use case doesn't require that, there's no sense in going that far down that route. Is that what you're saying? For institutions, they can flip on the KYC AML element when they need to, but for the most part, your ecosystem is going to
It's
run.
a switch on. It's a switch on with the integration already built in with chain analysis and some things.
Exactly.
But it's not like every single transaction we just push people to just go through the whole KYC route.
Yeah.
It just too much. It's
default privacy.
It's overkill.
And then, yeah, exactly. Which makes a
Yeah.
lot of sense, which is where, like where the ecosystem, like, hey, you don't want every transaction to be fully verified and vetted. You're not a centralized exchange. But if there's a specific use case where institutions want to play in this world, then they can easily switch on that switch and their use case may have it, but that doesn't affect the rest of the Bitlayer ecosystem. Talk to me about how you attract developer. Like, I think we all know the game of grants and tokens, and developers are jumping from one project to the other, just trying to collect as many tokens. But it also, maybe in a way harms some networks where they're not maintaining, that same developer growth. I know you have, a mining and rewards program. Talk to me about how you attract and keep top developers building on Bitlayer, and how challenging is it? Is it very challenging? Or because you're building on Bitcoin, you might have a more dedicated group that wants to see the ecosystem grow versus just jumping around on every layer 2 Ethereum project that's going on.
Good question. So I've been building ecosystem actively across different ecosystems. I saw other ecosystems, they grow, they up and they went down. And also some of the different playbooks, some worked, some didn't work at all. So we combine the good things about Ethereum ecosystem, like the thing I did it with Polygon. We learned a few things in the past. We have our ecosystem leaderboards. We try to create this healthy liberal market that the different protocols to kind of compete to make sure they are being properly promoted when they have some interesting product offering. So we have our DApp center, which we put specific ecosystem project in its spotlight, right? We actively working with Web3 native wallets, such as OKX wallet, Binance wallet, SafePower wallet, Trust wallet, and a few others. We did a very good ecosystem user campaign with those wallets because we need those wallet users, which are native on-chain users, to enter our ecosystem to try out these DeFi use cases. So those campaigns, we kind of promote almost like, imagine we're building an ecosystem like building a shopping mall. Those use cases like the stores in the shopping mall. So we offer different promotion seasons for the users come. Those are the interesting early adopters. We want to bring them, attract them, let them try all different use cases, learn along the way, let them finish all the on-chain tasks. By doing that, they can get some small fraction of the reward if they finish. And then by doing that, learning by doing and getting reward, some of the users actually stick around in specific use cases. So that's kind of the most effective campaign we've been doing, grow the user base together with all the Web3 wallets. So that's the way I've been growing. So Web3 builders, right? You mentioned they enter different ecosystems asking for grants. What they're asking not for grants, what they're asking is for endorsement and also how we can really work with each other support. Collectively, the ecosystem project success is our success. If we manage to bring top project, the global best of the best use cases in the world, build our ecosystem, then we are by default successful. So the way we're growing is supporting liquidity, like really good projects with our risk assessment. And then we really put them in the spotlight to bring users to them, to help them figure out their go-to-market strategy together. These two things are the most things they need. Not necessarily that's 50K, 100K, even $250,000 grants, which they don't even know how to properly use those money. And it's not just the gas subsidy. We are pretty low cost on the gas fees, but make it even cheaper on gas fee, almost zero. For short term, it's okay, but it doesn't really make sense. We just keep subsidizing every single use cases to zero forever, because in that case, there's no revenue stream in our network. That's not going to be sustainable. So we have certain different type of tailor-made ecosystem support program for different use cases, but it eventually really comes down to, does this use case or some different protocols have specific product market fit in our user base, in our community? We have almost over 3 million users now. If they have no product market fit whatsoever at all, we probably cannot support them. And we're being very careful and very selective on the grants or liquidity we support to the projects.
I'm curious, just as an entrepreneur to entrepreneur, is this more difficult than you've been so close to so many different projects and protocols and blockchain. Was this more difficult than you thought? Was it more expensive than you thought when you got into like the auditing and the pen testing and, from before you built this to now, was this a lot more challenging and expensive than you ever thought after being so close to many other projects?
Great question. That's a good question. Talking about try to be business-wise practical
Yeah.
and have a high growth rate while don't overburn yourself in your treasury and all that, right? So we raised altogether 25 million. We made around 8 million on gas fee revenue, but it's not infinite amount of money, right? That's why I'm saying we're being very careful with the grants and all that. The money we incentivize projects. We don't want to have this kind of a dynamic of pay to build on us kind of thing. We never actually promote and encourage, leave people that kind of impression. In terms of building the awareness, building the education, it costs more money than we thought. We sponsored quite a lot of events. We did quite a lot of hackathons, different kind of things. A lot of on-chain marketing, online marketing as well was actually pretty high cost. We're learning a hard way. We went through a lot of different Bitcoin magazine events. We sponsored pretty much all of them last year. We went to a lot of Ethereum events. We spent quite a lot of money, traveling around. We talked to builders. That costs a lot of time and money, but it's a long-term bet, long-term investment we need to do, especially in the first 2 years to make your name out there. I don't think we have to keep spending the high rate like it used to be, like last year, but the marginal effect of doing the same thing is getting lower. So we are shifting to a different approach of building awareness, keep the retention, right? In terms of, back to your question, what I thought cost actually more money than I expected is actually hiring the great people who build ecosystem with us and who wants to stay long term. It actually costs a lot of time and money. And we work with quite a really good, recruitment agencies as well. We work with some universities or some DAOs to find great talents. I think to build a very strong, robust global ecosystem require a lot of great talents.
So Charlie, you were talking about, the difficulties and the challenges and the expense of hiring. Can you kind of continue on that point? Like, you want the best builders in your ecosystem. Did you not realize it was going to cost so much, or you just didn't at the time, it wasn't that, you were focused on maybe other things pertaining to the business?
Yeah, I was focusing on building partnership, right? And also talking to a lot of investors, all kind of marketeer. But more importantly, you need to find true passionate ecosystem builder, grow with you in a team, and be very supportive. Having this altruism, helping founders, helping use case builders, draw your ecosystem. So it costs a lot of time and efforts and also money to bring that team. So yeah, we actually had a very little problem to bring the best talents and some engineers, research in the team. My co-founder Kevin Ryan used to lead the whole engineering side in the 4B Global Group. He was managing all-time high 300 people engineers. So we get a lot of engineers in the network previously. So we had a very little time in terms of bringing engineering talents. But on my side, on the global, all these ecosystem builder, finding the right fit of talents who actually build ecosystem with us actually cost a lot of money than we thought. Yeah.
I'm curious, you're talking about spending a lot of time and money going to other conferences. Yeah, I think you've transitioned to kind of hosting your own conference with the Bitcoin Next conference in Bangkok. What were some of the, trends or topics that came up during that conference, and maybe some notable thought leaders that you were impressed with on stage?
Great question. Great. Thanks for noticing that. Yeah, we did our Bitcoin and Next event. First one was in Singapore in our office. Second one was in Bangkok in the DevCon. The third one was in East Denver. We made our announcement with BVM Bridge integration with 5 different ecosystems. The fourth one was upcoming is actually end of this month in Dubai. So we are kind of doing that first because we have a pretty big ecosystem ourselves. We also have a lot of builders, a lot of partners who want things to share. So instead of, we are still kind of sponsoring or partnering with a lot of other event organizers, including Bitcoin Magazine's event and a few other events in Dallas, maybe Proof of Talk and others as well. We're going to Bitcoin Las Vegas this year as well, next month. But having our own ecosystem, like also Bitcoin focused, tailored frontiering level of event, bring the thought leaders, bring our investor, bring some of the builders in our ecosystem to share, let them share what they are building, let them share their insights. I feel it's very valuable and it's very tailored, high quality content. We can make it very educational. So that's something we're going to keep doing. And we gain a lot of insights. So back to the insights, right? I think, I think the Bitcoin DeFi is getting to very interesting. A lot of different ecosystem people feel like they want to collaborate with us. So we're going to partner with three and another major ecosystem with our YPTC and integrating our BVM bridge. We have those our own events, and because of the conversation we had with all these people who were listening us in the event, we explore that kind of synergy. So that's very important and valuable. The second thing I think is Bitcoin innovation, with OpCAD, right? All this upgradation of BIP, we still need proper time to properly have the alignment or statement within all the Bitcoin community. So that takes more time than we thought. So we learn a lot about this approach, even CTL, CSV, eCash, obviously OpCAD. Obviously, we're building on BVM, right? With the assumption that we don't really have a BIP next 2 years. So that's kind of rely on the existing Bitcoin script to do that. It's kind of what we are focusing on. But we don't want to be that kind of vision, right? Having our Bitlayer like Bitcoin Nest event, we invite some people who are promoting OpCAD very actively. We invite people who are building CTL as well. So all this technical sharing and let all the sound leaders to share from their different perspective is actually very educational and valuable. We want to do that to keep doing that in our ecosystem with our community.
I love it. I love it. What does the future of Bitcoin look like? Is it, Bitcoin converging with AI? Is it something that we can't even think about now? Is it like, mergers of acquisitions of the different sectors, whether it's DeFi on staking on Bitcoin, Bitcoin bridge and bridgeless systems? Like, what does the future look like in your eyes?
Great question. I think there's a lot of people talking about AI on Web3, right? Like that's certainly that a lot of attention within the builders there. We are exploring some kind of interesting AI use cases with Bitcoin, asset management and stuff like that. For us, the trend we're seeing, it's really focused on how to activate Bitcoin liquidity and to yield the yield products across how sustainable they are. It doesn't have to be just the existing Bitcoin DeFi primitive. It could be other type of yield. Energy could be a very interesting sector. I've been spending quite some time recently to figure out. There's very interesting energy solutions trying to lower down the cost for Bitcoin mining. And there's some energy solutions to, with some kind of a deepening kind of like infrastructure to provide interesting yield across some carbon credits, other things along the ways. So I think for me, I have to keep learning new things. We are very sector agnostic while we are focused on DeFi, but we don't want to say no to the new things, which will have some interesting patterns to fit. Right. So we are a bit biased in terms of DeFi focus, but we don't want to say we are saying no to every single new trend. I think for being a permissionless network and ecosystem, we need to keep our mind open while have some kind of different type of priority. Let's focus on big DeFi right now. Let's active more Bitcoin liquidity. Let's empower all the DeFi protocols to build with us with Bitcoin finality kind of infrastructure. But there's a lot of new trends with new interesting innovation happening. We need to keep learning until they really have the product market fit. We might not support them very heavily with liquidity or all the other things, but we definitely want to learn with them, bring them on our events, get them on board with some kind of ecosystem calls. We have the Bitlayer episode and things like that. So I think it's very important to keep them mind open.
I'm curious, like, you're based in, out there in Asia. Is it interesting that, Bitcoin ordinals didn't catch as much fire as like the Solana meme coin with everything that's happening with meme coins and meme tokens and NFTs at the time? Is it kind of surprising that the hype around Bitcoin ordinals has died down when this should be like the moment where they may be the most utilized, the most culture relevant?
Surprising, but also not surprising in the high side because ordinals, a lot of the protocols in the Bitcoin L1, it's very hard for them to really transact. It costs, quite a lot of time. For the people actually been trading meme coin and Solana, the experience trading on Bitcoin layer one with different type of protocols or like Unisat or different other wallets, it's quite different experiences. The hype around meme coin on Bitcoin quite lower down quite a lot. A lot of them attention being dragged to Solana in the last 18 months. Indeed, I think some of those protocols will come back, but I think for Bitcoin ecosystem right now is really focused on long-term sustainable use cases rather than just focus on a single asset protocols, somehow push them to another 100x, list on Binance, do this kind of more speculative play that happened in 2023 with OD and sets, right? But it's very rare case. It's kind of happened one off time. That's it. You can't really artificially engineer that kind of hype again with all these new dynamics going on. So what I would say Bitcoin meme coin will never happen at all. There's things like Aldine Fund. I feel that's kind of happening with a small scope, not as big as like 2 years ago, but is going to be the main meta in Bitcoin ecosystem. I don't really think so. I don't think Bitcoin meme coin is the main meta compared to the DeFi and other things. It's definitely a niche segment.
Right.
Yeah.
I'm curious, as we finalize the call, this has been a great conversation. Tell me, what is Bitlayer building in 2025? What do you have on the roadmap? What are you excited about that you're continuing to improve on internally?
Great question. Thanks for the podcast. It's been great to talk to you as well. I think the next step of us is to really have another wave of infrastructure operation. Our V2 mainnet launch properly, successfully, with the better infrastructure, we're serving an active market liquidity, right? We want to work with some of the new interesting institutions. We want to work with different communities across different regions. We're going to open up different market as we now in Korea and exploring the Korean community as well. So really just keep constant building, launching the infrastructure as we promised. We're getting towards V2, and then we're going to work on the V3, which is high performance, with parallel execution in our layer 2s, and while having the Bitcoin finality on the verification side, right? There's going to be a lot of optimization, which is tweaking around the whole cost structure while having a high level of security on the verification. These stuff we're going to keep doing. We're going to keep contributing the BVM while doing research for Upcat, together with a very important team like Stockway and so on as well. There's going to be a very interesting Upcat event, Bitcoin event in Hong Kong 2 years later as well. So, like I said, we are very technical driven at infrastructure projects, but we are more and more getting toward the real business, real use cases. So for ETP product or the institutional product we're designing with issuers, it's going to be pretty exciting. It's going to take a while. Hopefully we're going to launch something, get some traction by the end of this year. But more importantly is infrastructure. Want to make sure this new layer of infrastructure around Bitcoin can enable more powerful, high performance, better use cases to the users. And that's what we need, right? When we talk about adoption, we need to have good use cases with proper design, with proper performance and security to really let the users pay their attention. Until then, the whole adoption is not coming, right? The user doesn't come by themselves, and without a good product, the user will never stick around. Right?
And I think that's been proven over the last 15 years of Bitcoin and cryptocurrency and the waves that we've had. And it's still why Bitcoin's kind of leading the way, is that scalability might be an issue, but that security is fundamental. And hopefully you and others can unlock those use cases to make Bitcoin great again, for lack of a better word. Charlie, this has been amazing. Where is the best place? I'm assuming Twitter is the best place to find you. Or maybe, you have a Medium or LinkedIn that you like to, share some of your thoughts on. Where's the best place to reach you?
Twitter is best. Yeah. I tweet, I share my insights. We share our updates and news on Twitter almost daily basis. Charlie Who Sets, it's my handle. I think I'm just minutes away for any single DMs or anything. Yeah, feel free to reach out to me. Our Twitter handle officially is Bitlayer Labs. We have over 1 million followers on Twitter now. We do different type of Twitter spaces across different partners. So we share a lot of news every day.
I love it. We're going to make sure to include those in the show notes. Charlie Hugh, live, you get back to your restaurant, maybe get some dinner or lunch. I don't know what time zone exactly it is for you, But we appreciate you taking time out of your day to tell us how, your organization, and give us a lay of the land of what building on Bitcoin is really like.
Thank you much, Stephen. Great time.
Thank you.